Brilliant. Thank you so much, everybody, for joining. It's fantastic to be starting our second in our 2025 webinar series. I'm Ally Maughan. I'm the founder of People Puzzles, a business that's turning 15 this month. And we love doing webinars and sharing our expertise with you, giving practical takeaways on building your business. And today we want to talk about building business value. And it's an interesting time to be talking about it. But our aim for today is to give you some actionable things to consider doing, whether you think your market is booming or tough at the moment, to understand and improve your long-term business value through your team. So I'm really delighted to welcome my guests who are going to hopefully unmute themselves in good time. Today, I've got Richard Cummings from People Puzzles with me, who works exclusively with scaling companies. And over his career, he's assisted many of those to an event and helped them to maximize their value. Hi, Richard. Welcome. Thanks for joining.
Hi, thank you.
And I've got Andy Jones as well. So Andy's from the CFO Centre. Andy has nearly 30 years experience in commercial finance with 15 years as a CFO FD. And Andy, you've got significant experience in M&A activity.
Yep, thank you. Nice to meet you. Nice to meet everybody. Thank you for inviting me, Ally.
Yeah, brilliant. So we work a lot with the CFO Centre, so it was a real no-brainer to get Andy to join us today. Now, to structure the webinar today, I thought it would be good to use a few W questions to explore this topic. So get ready, you two, because I'm going to be asking you about why. Why should you bother to think about your business value? When should you think about it as a CEO or business leader? What and how can you do to build business value? And then finally, who is important on that journey? So I'm going to flick up a quick poll, if I can possibly use my Zoom skills. Here we go. So can you guys see the poll? Some of you have already done that. Fantastic. So if you can't, hopefully the poll's coming up. What is your biggest business challenge right now? So if you can answer that, that would be fantastic. And I'm just going to leave that going for the moment. So let's get started on the why question. And clearly people are interested in this concept of building value in a tough economy. So Richard, I'm going to start with you. Why should we be concerned about building our business value at all?
Well, I think we should always think about this because at some point we're going to exit, aren't we? And whether you've got a lifestyle business that you want to hang on to forever obviously is never a thing, is it? At some point you're going to give it away to your kids or whatever, or you're going to sell out and sell it out to another company. So you might not necessarily want to take your money out of it, but what you want to hand over is something that's quite valuable. And I had the benefit of working for an accountancy firm for a long time. So I worked with corporate finance. Andy's laughing, but I worked with corporate finance guys, and they explained to me, the three kind of tiers of business and what the value is. And tier one is kind of the company that a PE house could just pick up, and it's a company that the PE house will pick it up, take the leadership team out of it, and it will run really nicely. So that you've got long-term incentive plans in for all the senior leaders. There's no owner reliance at all. The business is really well structured, and you're going to get the maximum amount of value out of that sort of company because it's got so much value, because it's running quite nicely and scaling, and it's got growth plans, and it's got a 5-year plan, for example, that's being executed quite well by your highly motivated and incentivized leaders. And then the other one is something that you scale something that someone else might want, and it might be a bolt-on. And I know this because the reason I ended up in an accountancy firm, because I was working for a company that was specializing in HR, and the accountancy firm wanted it, so they bought it. And the HR firm was fully aware that people were going to leave because the family feel was going to go and it was going to become incredibly corporate. So it still had a value. And then there's the other one, which is a bit of a fire sale. So your business really, you're a nuisance for a competitor, for example, but the competitor will still buy you because actually it takes you out of the market. So they don't necessarily they might want your customers, but they don't want you, and they don't want your stock or your warehouse or anything like that. And I've got a client at the moment, and their growth strategy is all around making themselves a nuisance to the biggest player in the market, so that they will be a fire sale and an event, but they don't want the business anymore anyway. And so selling it out. So it doesn't matter which one you want to be, but you need to have a plan over which one's going to work for you the best.
Yeah, so looking towards different exit options. Andrew, what would you add to that as a fractional CFO? What do you talk to business leaders about?
In kind of in the SME market, the stock answer with a lot of business owners is they're looking to sell within 3 to 5 years, and we hear that time and time again with lots of the clients we work with. Unfortunately, in order to get that value, you need to be working on the plan years in advance of the point of sale. So the value at any point of sale is based on the previous year's performance, and generally a multiple of that. So it's key that leading up to that sale process, you've got multiple years of strong financial performance so you can maximize value on the exit. Equally, one of the reasons why it's important for us to talk to business owners, and particularly SMEs where the owner is involved in the business, is in a lot of cases, business owners do everything in the business. They've understood the business, warts and all. They've done every job in the business, and that's a real strength while they're building it. It's not a strength when they're trying to sell it. So just quick numbers. If a business has got £500,000 profit, the owner's looking to sell for a multiple of 4. The owner's thinking, I'm going to get £2 million for this business. The buyer is thinking, I've got £500,000 profit. It's going to cost me £100,000 to replace the business owner with a managing director. So the profit is 400,000. A multiple of that is 1.6 million. So straight away, there's a big difference between buyers and sellers. So it's key that we have the difficult conversations with business owners as early as possible, so they can, one, maximize the value, and two, make sure that they understand what the cost values are, how a seller would view their business.
Sorry.
Probably just one more point. Sorry, Richard. A prime example of why it's important and for it to be a constant process. One of my clients was on a buy and build process. We had funding in place. We were looking at multiple acquisitions. The owner, unsurprisingly, was looking to sell in 3 to 5 years. But due to a change in circumstances, which was a serious illness to the owner's partner, he flipped 180 degrees pretty much overnight, and he wanted to sell the business, remove the PG on his property, and walk away and enjoy retirement. So because we'd had the conversations about value, we were able to move very quickly from acquisitions through to a successful sale. So again, you never quite know what's around the corner. So it's important you have those conversations continuously, and equally you understand what the true value of the business is.
Sorry, I was just going to say I've been through loads of acquisitions where I've worked with companies that have bought other companies because we've wanted to buy them, and we rule loads of them out because of that owner reliance, where we say actually that they are the business, and once they're out, there's no value. So even if you get them to do a 3-year earn out, for example, you're spending all of your time trying to get them to get to a position where they can get themselves out of the business so that actually it's got a value. So yeah, you literally, you might think your company's got loads of turnover and a good roadmap for the future, but if you are the only one making all the decisions, it's just not there.
Yeah, that real dependence on that person who's maybe likes being the linchpin, or actually doesn't have a well enough trained team around them to not be the linchpin. It's an interesting place to be, whether you want to be that hub of the bicycle wheel holding it all together all the time, or we're going to come on to who later. So it's interesting, isn't it? Because the other thing I was just thinking while you were talking is, you don't buy a house and then just let it sort of slowly deteriorate around you, do you? It's, if you invest something in something that your family's wealth is in and is hopefully going to be your pension plan, you want it to be as valuable as it can, just in the day to day, just in the year to year, so that it's building up its value and isn't just let it crumble away sort of around maybe just chasing today's profit or today's turnover. But it is interesting, isn't it, the market we're in at the moment? I mean, spring statement was this week. We know that the outlook for economic growth isn't what is it, 1% or something, absolutely tiny. And we know we're operating in long-term instability and large-scale legislation and taxation changes. So it is all going on. And a lot of that responsibility is falling on business owners and business leaders. And I have to say, when you talk to business owners, some people are still super enthusiastic, going for growth, feel like they're going to deliver something brilliant even in a tough economy. Other people, there seems to be more of a sentiment of a bit of depression or sort of gloomier outlook, let's say. So with that in mind, Richard, again, I'm going to come to you first. When should business owners think about value? Can we just forget about it for a while until the economy perks up, and then on a rising market, we can all sort of follow the swell?
No, definitely not. I think that it's funny when I start, as Andy said, every business owner says we want to sell in 3 to 5 years. And, there's companies that I've worked with for 15 years and it's been 3 to 5 years continuously and they still haven't sold. But one of the things that they've said is that when they focus on this stuff, their life's got easier because they actually have got other people burdening taking some of the burden. So they've put really good finance in place. So they've got people that are worrying about that and they're not having sleepless nights about paying the bills. And they look at the sales team and they get some really, really senior salespeople in to actually look at their market position, and they're not putting all their eggs in one basket anymore. They're not relying on just a couple of key customers, and they're spreading it out. And what they are doing is making sure they've got the right people in the right place doing the right things all the time. So I think really I know when I go into companies and I say, right, okay, come on, let's just have a look at your team. Who are you carrying and who are the ones that you really, really need? And you make those tough decisions now. And it's funny because last year I went for a round of redundancies with a company, and they basically, their growth trajectory was just completely off. And we got rid of a load of people, and they openly said that had they done that 2 years ago, actually their headcount costs would have matched their income, and they wouldn't have had to gone through that. So I think looking at this stuff, even in boom times, and looking at, who are your superstars, who are the ones that you absolutely critically need for the future, make sure they're incentivized. Who are the ones that actually they do a great job, they're never going to set the world on fire, but without them, life's going to be very difficult because they might be, they know the business really well and they're keeping it ticking over. Who are the people that are right for you now, but they're not going to be right for you in 5 years' time? So how do you incentivize them in a short term? And who are the ones that actually you're just carrying that are causing you 80% of your headaches? And if you can get rid of those, then that gives you a bit more time and bandwidth to deal with everything else rather than firefighting and battling with these people that aren't really helping you scale your business.
So those 4 types of people that you've just mentioned, Richard, can you just get practical for a minute? How would you actually sort of sit down and write names in boxes?
Yeah, I do. I write names in boxes. Yeah, I write names in boxes. So I just call it a 4-box grid, put my superstars in the top right-hand corner, my nomads in the top left-hand corner, because they're the people that are going to help you grow your business. Put my team workers, if you like, in the bottom right-hand corner, because they're the foot soldiers that are going to keep it moving. And then my transfer list in the bottom left. And some people, my lights just went off, sorry. Some people struggle to it's ESG, so I've got everything's on time. So I've got so yeah, so who are the ones? So the people that are going to go. So if people really struggle with that concept, the other thing that I say is, okay, we're starting again next week, and we're starting the company again. Who do we absolutely need, and put their names on the list, and then you realize who doesn't feature, and they're the ones that automatically hit your transfer list.
Yeah. I mean, it's called business for a reason, isn't it? It's not we're not here just to give people jobs for the sake of it, but you've got to balance that, haven't you, with sort of how you treat people, how you look after people. I mean, there's sort of ESG element of it as well. But I mean, I totally agree with you. I'm not a jobs for life kind of believer. I'm a who's going to help us get to the next stage.
With the best will in the world, companies outgrow people, and they were right for you. They were right for you 5 years ago. They were perfect for your business, and you feel like you owe them something, but you don't. It's not fair to keep them in a role where they're not succeeding, and they're not succeeding anymore because the role's got too big for them. So the nicest thing to do is to exit, but do it in a nice way and help them.
If I can just give a kind of real life example to that, if that's okay. Before joining the CFO Centre, my last role in PAYE employment was with a haulage company. When I joined, the turnover was about 18 million, and up until that point, it was a startup, and it was quite high turnover, but it was still a startup, and processes were done on a nod and a handshake, and calculations on backs of scraps of paper. When I joined, it was effectively becoming a commercial organisation, and we started putting in process, procedures, systems, controls, and some people who were great in the first phase of that really struggled with the second phase, and some people who we brought in as we grew would have been completely out of the depth in the first phase. Fast forward 5 years, and we've grown the business significantly, and it's ultimately become a small corporate. At that point, the reporting, the compliance takes more precedence than it ever has done. And again, we needed specialists in that who would have been awful and would have been out the depth in the first couple of phases, but were ideal then. And there was various people who went on the journey with us, and they evolved and developed over time. And there was other people who were comfortable in one phase, but really struggled in the second phase. So it's key to identify those people who've got the ability to grow with you and evolve as the business evolves.
Yeah, and the business itself becomes bigger, doesn't it, than any one person. And that person, I'm afraid, sometimes is the managing director, sometimes it's people on the leadership team. Yeah, so it's the classic business growth problem and the bottlenecks that you can hit. So Andrew, just coming back on that question about the market we're in right now, what are you advising people?
Yeah, probably coming back to your initial point about the growth forecast for the UK and the depressing news that came out of the Chancellor's office earlier this week. I think that's always a little bit of a misdirect, because I think what's much more specific is individual industries and what's happening in individual industries rather than the economy as a whole. Because again, business owners, senior management teams are much more focused on that industry than the wider macroeconomic picture. So I think it's really key to be aware of what's going on around you at the moment, and I think it's been rather under-publicised. The change in national insurance that's literally around the corner. That's going to hit companies in April. It's going to hit the bank accounts in May when they're due to make those payments over to the government. The publicity that this change has had is significantly less than the change in, for example, pension auto enrolment. So I think there's a lot of companies going to be really shocked by the impact this is going to have on their bottom line in the coming weeks. As a rough number, it's approximately about £820 per employee it's likely to hit the business by. So it's a big number. And what that's going to mean is that there's again, the economic uncertainty, the change in the cost base is going to mean that a lot of companies are going to tighten the belts. They're going to hunker down. They're going to try and ride out the wave, and then hopefully wait for price increases to cover the cost increases they're suffering. But with that comes opportunities. With any challenges and changes, there's risks and there's opportunities. So whereas a lot of companies will, like I said, will hunker down, they'll restrict pay rises, they'll just try and ride it out. At that point, there's an opportunity for an aggressive company to recruit people on looking for that pay rise, good people who are going to support your business. There's opportunities to bring in those people who maybe wouldn't have been looking to jump ship if the economic environment was different. So again, there's risks, there's opportunities, there's cost controls, and there's ways of growing aggressively. I also think in a lot of sectors, and again, some of these I work in, or my clients work in, where there's a lot of high volume of employees on relatively low wages. So I'm thinking of care sector, the hospitality sector. This change in national insurance is really going to hit those sectors where people cost are such a big part of their business. And generally what that means is there's then going to be an increase in mergers and acquisitions activity. The companies have ridden out COVID, they've ridden out Brexit, they've ridden out unparalleled levels of inflation. And is this going to be the next thing that's the camel that breaks, or the straw that breaks the camel's back? So that generally, the more and more pressure companies get put under, the more and more those exit plans get brought forward and people want to move away and not have the headaches. So I think there's going to be a significant increase in M&A activity over the next 12 months. And again, if going back to the very first question, if you understand your business and your value of your business, you're then in an ideal position to try and leverage that to make sure that M&A activity happens in your favour.
Yeah, brilliant. I am just going to stop sharing my screen if I can work out how to do that. There we go. Then we can see your lovely faces a bit better. No, I think that's a really good point, because actually, from what I hear, many companies haven't finished paying back their COVID bounce back loans either. So we're in this sort of world of, the NI changes, the national minimum wage increase about to happen, COVID loans probably still biting people. But I love what you were saying, Richard, about actually for the busy, pressured business leader, life gets easier when you are trusting more people on your team to help you, you're sharing the burden, you're putting the responsibility of the business being successful sort of on more shoulders. And so you're not maybe just facing that alone. So even when the economy is really tough, there is probably no bad time to think about in my business, what are the things that are going to make an impact? And actually, you know, that brings me very nicely on to my next question, which is what can people do, or how should people go about thinking about improving their business's value? Because there are seminars and seminars and seminars, like they're endless, aren't they? The sort of value, business growth, valuation of your business, and accountants will have one view, and Andy, as you said, it's the last 3 or 4 years of accounts and profit, and but there's, you know, there's a number of factors. So I'm going to ask you both, Richard, to look beyond people and Andy to look beyond finance. Let's get practical. What can you do to build your business's value? Andy, let's start with you.
Yeah. Okay. I'd probably just start off by reiterating a point I made earlier. That business value, take the owner out the day-to-day running of the business. That generates that long-term value. Adding to the point Richard's made, taking away the pressure of dealing with the accounts and managing the cash flow, dealing away with the pressure of generating sales, take away the pressure of marketing, and allow the business owner to manage the people who are delivering all of that. So that gives an intrinsic value to any business. With my finance hat on, the very first place I start when I start working with a company is what's the reporting? If you can't report what you're doing, you can't identify problems. If you can't identify problems, you can't fix them. So in terms of maximizing that value, you need to know where the issues are in your business. So that reporting, whether it's month-end accounts, whether it's KPIs, whether it's some form of operational reporting, getting the reporting right is key. And again, further down the line, if you are talking about a possible exit, having the benefit of all those reports really helps the seller understand the business performance and the operation. So again, it's absolutely fundamentally key to get the reporting right. And then at the risk of infringing on Richard's points, the one big thing that I'm always keen on is making sure you've got the right people, and making sure you're developing the right people. So my finance hat on is I'd rather promote internally and recruit a more junior role than pay to recruit a more senior role at a much higher cost. So again, one example, the haulage company I mentioned before, I brought in a 19-year-old, fairly wet behind the ears accountant who's just doing his AAT exams. And we mentored him, we developed him. He obviously had a lot of potential. We went through that business cycle we mentioned, from the commercial to the corporate business. He's now at 28 years old, the finance and operations director for that business. So the cost of acquiring that person was minimal. The cost of acquiring a finance and operations director now to replace him is huge. So bringing the people on the journey with you, having that inherent understanding of the business, a strong senior management team, just really does just give the business that stability that it needs.
Yeah, fantastic. Richard, what about you? You've done loads of this kind of stuff. What are your go-tos on business value? What people can do with it?
I think that's put a plan together. You need a plan. You can't just carry on the day-to-day thinking that, you know, we've got a sales team, we've got a target market that we're going after. Look at what else you can do. How much of the market do you actually have? You know, one of my clients, they're quite niche in what they do. And I remember the day I met them and I said, how big is the market? And actually produced it. They're actually able to tell me how the potential number of clients that they have. And that's great, but there's a point where you've got them. And what happens then? So can you like, what are you going to do in 5 years' time or 6 years' time that's going to help scale the market further? There are other things that you can do in that market. I think they have a plan, have a 5-year plan, have a 10-year plan if you can, and like a really big growth strategy, but bring it down to 5 years, then pull that back to annual. What are we going to achieve this year? Pull that back to quarters, allocate out between each department head or senior person. If you do that, and then everybody does their bit. And the thing that I keep saying is, you know, if everyone just don't give someone 3 jobs, give them 1 and say, do that job really well. And if you do that job really well, we'll hit our annual plan, and say that to everybody. And if someone's going slightly off and they're not getting there, give them a hand and help them. It is all about as Andy said, you know, any MBA course will tell you it's people. That's all you've got to worry about. Get the right people in the right place doing the right things, and it'll work. It'll work very, very nicely. You got the wrong people, get them out and get someone else in. I'm going to agree with Andy a bit. I do agree with organic growth. I think it's really good. I also think it's really good to get other people in that have got experience working in different industries or different companies, so they can bring a new, a fresh pair of eyes into your business. And I don't think there's anything wrong with that. We obviously go down and promote fractional and say, you know, bring an HR person in or bring in a CFO, centre director, and but also having people on your team like your sales director that's come from another business and can add a lot of value rather than having one of your sales guys that's just been promoted through the ranks. So that I do agree with organic growth because I think we should offer it because it's really good. And as Andy said, it's cheaper and he is a finance guy. And but I do think we need a happy balance.
Just want to dig into this area of planning it a bit more, because I've met business owners over the years who they sort of hear about this concept of planning for growth or planning for value, and they sort of look a bit blank maybe and say, what do you mean you can plan for value or you can plan for growth? Is that the business plan? Is that a different kind of plan? What can you give us a bit more on that?
It's not really the business plan, it's your aspiration of where you want to be. So where do you want to get to? Like how big do you want the company to be? And then what does that look like? And then you turn that into the business plan. So if you want to break into new markets, or you want to break into new territories, that's your aspiration. Well, how are you going to do that? And who do you need to help you? So it's all very well saying we want to go into America, but what does that look like? And you know, if you say we want to go into America, it's exactly the same thing as saying we want to sell in 3 to 5 years. Unless you actually have a plan to do it, you're not going to do it. So work out what that plan is. And I know that one of my clients, they wanted to go into a new territory, and they just went and recruited the people that had done it historically 20 times and said, do it for us. And that worked really well for them. And then they used that as a roadmap to go into other territories. So I think that once you've got a plan, you can reuse that plan again. But I think big and don't think like an owner anymore. Think like an investor. And if you can think like an investor, you'll be able to see how your company can add value, how you can get more value out of your company.
Yeah, I think sometimes the challenge is that thinking, isn't it? Because it's all very well, sticking your finger in the air and saying, oh, I want to be 20 million pounds. But actually, it's the steps, it's the plan. And then it's building that into the rhythm of the SLT meetings or the board meetings. And I love that, the quarterly, the objectives, that every single person on the team knows what they need to do to be part of that plan that could deliver across the whole business. I mean, your story earlier, Andy, about the haulage company that went from the disorganized bits of paper through to the corporate feel, that's a quite hard journey actually to go on, I think, as an employee, because you sort of hark back to the old days. I see that a lot. Oh, I loved it when I joined. It's not the same now. And as a business owner, you sort of feel a mixture of guilt, but delight, because I don't want to be how I was 5 years ago. That would have been a failure.
Yeah, exactly. And I guess most people on the calls it'll resonate with them of those phrases you just mentioned, and they're incredibly frustrating. We've always done it this way. That no, we've always done it this way, so we've always got the results we want. So if we want to change those results, we need to do things differently. So yeah, those cliches are very much part of the modern world.
Yeah, yeah. Well, look, let's talk about who then. This is our last W question. Who is going to help us? You've mentioned a little bit about SLT. Richard, you've mentioned a little bit about fractional as well, but I'd be interested in both of your viewpoints. High performing teams, SLTs that take the burden off the business owner. How can we do this who piece really well, that maybe not all those people are shareholders, maybe not all of those people would benefit hugely in the event of a sale, but what we're trying to do is to get them on our team and share the burden. So Richard, again, let's start with you. How can you get that who business value piece in place?
Well, I think the golden rule of change management is involve everybody it's going to affect, don't you? So if you're on this journey and it's going to impact everybody in your company, you take them on this journey with you and you get them all bought into it. And that does eliminate a little bit of well, we always did it that way. And, and the only constant is change, isn't it? And we know that that's it. We're always going to have to evolve. We can't just carry on doing the same thing in the same way, the way that we always did. And I think you can't give everybody you give your senior team some really good long-term incentive plans to help you get there, and then you funnel that down to everybody else. And whether or not that's a bonus of some description for everybody, or you give some recognition to everybody, like that if a certain team's done something really well, but you get them helping you. And yet everybody, you know, if we only look at the leadership for the ideas, we're only going to get 10% of the ideas. So let's talk to the people that are doing the work and find out what their challenges are. And I've done things with a lot of companies where we've got the junior people say, and we ask them questions and say, you know, what's frustrating for you? And these are dealing with their customers, and they say, oh, our customers always complain about X, Y, and Z. Well, we had no idea about that. So let's just find out who can help us change it and how we can make those improvements. So I think the who is everyone. Sorry, I need to change my timers, don't I? The who is everyone, and the way that we incentivize them or get them involved it depends on the level of the person. And some people just want a career, some people want a bonus, and we have to manage the expectation of each of those people.
Yeah, thank you. Andy, what about you and your fractional role?
Yeah, again, I think just going back to some of the businesses I work with and I have worked with over the last few years, what is evident in a lot of them that the MD, the CEO, is a really strong personality, and the team around them are sometimes reluctant or nervous to ask the right challenging questions. And somebody coming in with the seniority, the experience of scaling businesses, of exiting businesses, who can then challenge constructively, can quite often have a bigger impact and can quite often add a lot of value than simply a lot, you know, the MD CEO saying, I'm going to do something, and a lot of people nodding along in agreement. So because we are that independent person, with that experience, we can sometimes have that tough conversation to make, you know, going back to the very first point, make the MD realize he or she needs to become a chairman or a chair rather than heavily integrated in the business. So again, I think that who is the right person at the right time. If business is normal and you're carrying along and there's no real bumps in the road, you probably won't need somebody for their experience in exiting and growing. But at the point when that they are on the agenda, bring people in who've done it and can guide you through that right process.
I think we have the benefit to challenge, because we can challenge because nothing's going to happen to us.
Yeah,
So
exactly. Yeah.
We're quite protected, aren't we, in a way, because actually the business owners got us there because they have confidence that we know what we're talking about and they trust us. So when we say things, and we're not going deliberately to upset them, but we're questioning them and getting them to think why they do things in a certain way. And we can do that in a healthy way, where somebody that's on the payroll, and I've seen it firsthand, people that are on the payroll feel like they're raising their head above the parapet and they're slightly nervous and they think they're going to end up getting fired, and because the MD is a very strong person, and they'll do it a couple of times and never do it again. We can just continually do it.
Yeah. And again, along the same lines, I've seen examples where we go into businesses, we can put a lot of different hats on, a lot of different caps on. So I've got some clients that effectively ask me to run their management, run their finance team on a fractional basis, a day a week, etc. And I've got other clients who the business owners identified that there's a big gap from them to the rest of their team, and they've got all these great ideas, but there's nobody close enough to them or senior enough to them or with enough experience to tell them which ones are good and which ones are bad. So with that type of client, I might go in a day, a month, a day, a quarter, and we literally just talk about all these ideas that a lot of them may well be crazy ideas, but they're ideas that the owner's got, and he needs a sounding board and a check and balance on which ones are worth exploring. So part of the thing is having the right people around you, but using them in the right way, and not just having them there. So making sure you're getting out of that relationship what you need.
Yeah, I mean, I've heard a few times both of you talking about how if you're trying to do something new or shift the gears, that having somebody in the team who's done it before, whether it's going international and so they know how to set up all that stuff, or whether it's sort of the next step up in the turnover journey, that trusted pair of hands of someone who's experienced it before or is actually currently doing that with a range of other clients, you're in a different space, aren't you? I mean, before I started People Puzzles, I think I'd managed a budget of about £10,000, and I had line managed 2 people. And that was in no way good training for, running a £4 million business that was growing 20% a year, and then being involved in a £6 or £8 million turnover business. And without those people around you who are like, of course I can handle a budget like this. Of course I can put together a business plan of this level. Of course I can chair SLT meetings that hold people to key objectives between this quarter and that quarter. It's that it doesn't mean that I think I maybe couldn't do that stuff, but it has a huge amount of comfort that when somebody alongside you who's done it before, is there. It's like critical friend or trusted advisor is sort of the words that everybody ends up using, but actually in its best form, that can bring a lot of confidence, and especially in an economy like we're in at the moment with all of the changes we've talked about, feeling comfortable in that kind of environment goes a long way to sleeping well at night.
I in 2023, I was working with a client, and the things were okay, and I just said to them, we've got to go big. So in 2024, we're gonna put some big figures on the table, and we're going to go for those. And this would have been June 23 or something like that. And then we said, right, we're going to make these figures work, and we are going to hit these challenging figures. I had people sitting in that room saying they didn't think we could achieve those numbers. And anyway, we put it all down, put a plan together, execute the plan perfectly, get the right people doing the right things in the right way, and we hit that 2024 figure by July. Because
Wow.
everybody's working really hard and everybody's doing the right things, and so I start putting bigger figures on the table after that. But it's the having people that have done it before. It's if you've got people that have done it before and have helped other companies, and you've got the trust that they can do it for you. And I think that's what you need. And whether that's fractional or that's bringing in some senior people from another company or whatever that is, or a good mix of both actually would help. You're in safe hands, basically, is what I'm trying to say.
Yeah, brilliant. I think let's take some questions. We've talked about those W's. I'll just circle back to them at the end, but we've got some really interesting questions coming through. So here we go. What are some common blind spots leaders have when it comes to business value? Who wants to jump in on that one? Common blind spots.
Yeah. I won't hammer it home too much, but again, that business owner being involved in the business is key. And then I think lots of business owners, when they're looking at the value of the business, they start looking at projected profits. If we won this contract, if we won these 5 or 6 tenders, this is what it's going to be worth. Whereas the reality is, it's worth what it is today, not what the potential the buyer is paying for that potential. The seller's selling what it is at that point. So the can-dos and opportunities really, unless they're secured, aren't really part of value. The potential value that aren't realised.
Yeah, just on that point, actually, the value of the contracts that you've got and what the end dates are. So how do you get your business? Where do your customers come from? Are they signed in for a long period of time? Are they going to still be there definitely within 2 years after you've gone? That kind of stuff's going to add value to your business as well.
Yeah, it's tricky things like that, isn't it? I mean, at People Puzzles, we don't like to tie people into long contracts because we feel like the choice is so important. And we've known for a long time it would impact business value. But I guess it's about making informed choices, isn't it? So you might know something could improve your value, but still choose not to do it. But that's fine. You've made an informed decision. If you don't know that would make a big difference, so you don't even think about it, you're really missing an opportunity, aren't you? Richard, I've got a question here for you. What are the biggest people factors which can drive or drain business value?
Making sure that everybody knows what they're doing. And there's this thing on EOS where you give everyone a number. So everyone has a number, whatever that is, an EOS entrepreneurial operating system. Everyone has a number and they know what they're working to and they understand how they contribute to the business. So whatever that is, even if it's the secretary, how many phone calls he's got, how many seconds, for example, he's got to answer the phone in, that's the number. People that don't know how they contribute to the wider business don't actually always perform to the best of their abilities, and they're on it for the ride. And those people have got to go.
Yeah, it's interesting, isn't it? Because sometimes that kind of due diligence question might be answered about contracts and notice periods and you know, really nitty gritty things, but actually the real value change is in people achieving numbers that are going to drive the business forward.
Yeah, there's obviously a compliance factor that you need to have that stuff in place because that's good due diligence. But as a minimum we would expect that. I think.
Yeah. Andrew, I've got a question here for you. How many years of strong financial value do you need before you think about selling?
It's difficult to answer that. I think you generally look for 2 or 3 years of stability, but if you were to win a significant new contract and that contract had significant, length to it, that added 50% to your turnover and your profit, then a savvy buyer would recognise that, and they'd recognise there's been a step change to the business. The fundamentals are still the same, but the profitability has increased, and that increase isn't a one-off. So as long as you can show a stable plan, and any changes are consistent rather than just ad hoc changes, then even 1 year should be sufficient. It's just having a story behind it rather than saying it's exactly 3 years or 4 years. 3 or 4 years is great in a stable environment, but the reason why it's changed and the long-term benefits are key.
Yeah, interesting. I want to just loop over to the poll that we started at the beginning. It's really interesting how mixed it is across the responses. I don't know if you guys can all see the poll, but in first place at just under 30% is growth. So growing in this economy, really tough. Then the next two equal: people and hiring and leads and sales. And then the next one up there is cash flow. So it's really mixed. All those are all sort of 15 to 30% of the responses. Is that what you're seeing out there with your clients as well? Or are you seeing your clients sort of just taking the economy by the horns and deciding to go for it anyway?
Yeah, again, I'll start. I've got a client that's in the care business who has just completed the purchase of £10 million worth of care homes. So there's people out there who are, again, it's sector by sector. Care homes, we've got an aging population, so the longevity of that is different than some other sectors. But I think cash flow, putting my purely CFO hat on now, cash flow is key. So slightly disappointed that was fourth from my point of view. But most businesses don't go bankrupt because they're not making enough profit. They run out of, they go bankrupt and go into administration because of cash flow issues. So they may still well be profitable, but if the timing of payments coming in and payments going out aren't reconciled, then that's when companies hit financial issues. So again, cash flow is key, and at the moment, and in some economic times, it's potentially more important than profit.
Yeah, I think this
Yeah,
just
that's sorry.
one
Go on.
here, Richard. I was just going to direct. I've shared the poll now. So 20% of people are saying that people and hiring are a big challenge. But actually, we know it's a recruiter's market at the moment. There are more candidates, or this is what we hear from the recruitment agencies and from the market, more people out there than there are jobs. So have you got any advice for people who are still finding that people and hiring piece really difficult?
Yeah, so that you're right. There are an awful lot of people out there that want jobs, but they're all the ones we don't want. So the people we want are the highly skilled people that are going to add value to our business. They're not the people that have just come straight out of university thinking that they deserve a £50,000 a year job to push some paper clips around. So I think the thing is you have to make yourself the employer of choice. You've got to think I get exactly what Andy's saying about cash flow, but he's right, because I know loads of companies that have gone bust and they say, but we don't understand it because our order book was full, and but they've just run out of money, which is what happens. But I think if you can just balance everything else and you get the right people, and I keep saying this over and over again, you need the right people to help scale your business. If you could be genuinely an employer of choice, the people from the competition will come to you naturally. You will never have to advertise for a role because all these people will be looking at your website, and you'll have the pick of the bunch, and you'll be having the right people that you want. So where those people are in your competitor at the moment getting really nervous because their MD's getting really nervous, what you're actually doing is driving them to you, and you're putting your competitors out of business just by taking their great people. Hiring is a problem, and I think lots and lots of people struggling to hire salespeople. And I'm constantly hiring salespeople, and you see it. They've done 2 years here or less. 9 months from job to job before they get found out they're rubbish. And if that's a problem, we need to get good salespeople that are currently in a job that they're feeling unrewarded in.
Yeah, I think there's lots of skills to hiring salespeople, well, actually to hiring anybody, but particularly salespeople that most companies don't know. Because actually, if you're only hiring one salesperson a year, how can you get good at it? It's worth getting some fractional help on that one, I'd say.
Yeah, I would say.
Right. Look, let me draw a few things together, if I possibly can. So, why should we think about business value in the kind of economy we're in at the moment? Well, there's always different reasons why people want to sell, whether it's selling the whole business out to PE, bolting onto someone else's, a fire sale. Your personal circumstances, I think, are absolutely key in this as a business owner, business leader. Um, sometimes you can't control the things going on in your family or around you, and being able to say, actually, now is the time. And for the last 10 years, I've kept my business in a state of high value and readiness for the right opportunity or for the right moment, is a totally invaluable place to be. And actually, if the business changes, you share the burden, it becomes easier to run the business as a result of keeping your eyes fixed on business value. Isn't that something that every business leader wants, for the job to be just that little bit easier and feel like a shared burden instead of being on your own? So what and how? Well, I guess we haven't probably gone into all of the nuts and bolts of the things that improve business value today, but making sure you've got great data and that you report on it. I think, Andy, that was one of the key things I took away from you. I see it time and time again that small and mid-sized businesses just don't have access to great data, and so many decisions are made by a gut feeling or by a, well, this is how we've always done it. But actually, to have data that really gives the right information to make intelligent business decisions is key, and how we have a plan for it. So whether that's a turnaround for the marketing function or better sales processes to give us better knowledge, having a really good plan that is not just for the big number at the top, but that's broken down into quarterly, monthly, by person, by department. Everybody knows what they're doing and they actually can do it. Richard, I loved your comment about only have one job, but the reality in loads of businesses, people feel they have three hats. So I guess there's a place for absolute clarity on what that person's delivering, even if it feels like it's still a couple of jobs and you've got to grow a bit more before you can have a different person for each of those things. But keeping focus so that you are, doing the right things and not doing some nice things around the edges that make you look busy, but actually aren't helping the business to improve its value and deliver on its business plan. And then when we talked about who, I think it was you, Richard, that just said it's everyone. So everyone has to be involved in the business being stronger and better. So everyone needs the right incentive plan, the right clarity on their role, knowing what they're doing and delivering on it. And yeah, I think just the thing I'd like to leave everybody with is that idea that we kind of need people to say, I wish it was how it was, but this company has changed beyond recognition from when I've joined. Because if it hasn't, you won't have grown. You'll be the same size, the same value. You won't have gone on that journey and wiggled your way through those bottlenecks and climbed over those barriers to growth. That means you're in a different place today than you were 5, 10 or 15 years ago. So it's brilliant. Thank you so much for joining us. Please do get in touch with any of us on LinkedIn. Andy, thank you for joining us from the CFO Centre, the leading provider of fractional CFOs in the UK and globally. So if you've got, people overseas and you need CFOs overseas, you guys have got some fantastic partners, well, parts of the CFO Centre all over the world really now. And Richard, thank you. I mean, People Puzzles team, got to do it. But thank you so much for sharing your insights and your expertise with us. It's fantastic to have people on our team who just day in, day out are thinking about business value and M&A opportunities and how to plan for those and deliver on those. So we're going to be sharing the recording for today, both as a sort of, you can watch it as a webinar, but equally as an MP3. So please do share this with anyone that you think would enjoy listening to it or get some value out of it. And we're going to be doing our next webinar on the 22nd of May. Let me share. Here we go. My special Zoom skills coming to the fore again. So there we go. 22nd of May at 1:30, The Secrets of Scaling Success. Again, another CEO's guide. So specifically for CEOs on the secrets of scaling. So a really growth focused chat. So please do join us for that. And just leaves me to say thank you to Richard and Andrew. It's been great having you on.
Thank you.
Thank you very much.
Brilliant. I hope you have a good rest of your Friday, everybody. Bye for now.